Now live streaming. So we're streaming this on Facebook, YouTube, LinkedIn, everywhere. So we have a bigger audience. Okay. So Brian, let's jump into this. First of all, give us the background on what this program is, the origins of it, where it came from. I want to hear that first.
Sure. So we're a CPA firm. We have hundreds of business clients, and we were, affected by the COVID outbreak, just like everybody else. To help business owners, the main three large buckets of incentives were the EIDL, SBA loans, the PPP loans, and also the employee retention tax credit. The first two, everybody used. Those were a little bit easier to understand, a little bit more straightforward. The third is the employee retention tax credit. One of the qualifications functions fairly similar to a second PPP loan. It's a per employee credit that started on March 12th of 20 and originally was going to last through December 31st of 21. They cut it off. It ended September 30th of 21, and it is a per employee credit, total of $26,000 for all periods. $5,000 per employee lies in 2020, $7,000 per employee per quarter for the first 3 quarters of 21. So a total of $21,000 per employee in 21. And it's essentially if you meet one of the 3 requirements, it's essentially a amended payroll tax, 941 payroll tax return.
The details of how you qualify and those parameters you just mentioned, how long do people have now to get the application in? How long does it last?
Sure, that's a good question. And unlike other programs that essentially have a start and end date, this is dictated by the amendment statute for income tax returns and payroll tax returns, which is essentially 3 years for the original filing date of the quarterly payroll tax returns, which is typically 15 days after the quarter. So, for example, if we're filing a Q2 of 20, we have 3 years from that date. So we still got a couple of years to file these things.
Got it. Okay. And so let's jump into the qualifications a bit. If you could just address, go back, what are the qualifications? And I want to make sure I understand it for our audience. Let me hear a little bit about that.
Sure. There's 3 main qualification criteria. Drop in revenue compared to 2019 pre-COVID. The business is affected by a government mandate or closure, or the business is significantly affected by a supply chain disruption because their vendor is affected by a government mandate or closure. It's important to know that qualifications for the individual quarters are separate. You determine the qualification for any given quarter on its own. The next quarter, you determine the qualifications for that quarter. So most of our filings are for multiple quarters, and we may be mixing and matching how they qualify. It's very typical in the spring of 20 for businesses to be closed down by a government mandate. And then it's very typical for businesses to qualify by revenue in 21. The important thing to know is in 2020, the last 3 quarters, the revenue qualification is to have a 50% drop in gross receipts compared to the same quarter in 20.
I was just going to ask you that. I was going to ask you the drop in revenue. What is how much? Okay.
Yeah. In 21, they lowered the bar significantly. In 21, we can claim any one or all of the first 3 quarters, and the revenue qualification is 20% less than the same quarter in 2019. And it's important to know whenever we're having an initial consultation with the client, we really want to get the whole picture because there's some quirky rules. There's alternate valuation dates where you can use another period. You can elect another period's numbers to qualify for a current period. And also in 2021, there's kind of a 2-for-1 rule where you can, if you qualify for one quarter by using the alternate valuation date, you can automatically qualify for the next quarter. But the main rule is 2020. We need a 20% drop compared to the same quarter in 2019.
Got it. And Brian, what industries have you been dealing with? Is it any industry? Have you seen any, one area that's more common than the other? How many employees? Like, what does a picture look like of who's getting into this?
Sure. Well, the limit in 2020 was 100 employees or less. Again, they lowered the bar. In 2021, we can go all the way up to 500 employees or less. The program was really designed to help restaurants. That was the original concept, but all industries qualify. You just, when you're determining which businesses are most likely to qualify, you're really looking for the ones that are most affected by the COVID outbreak. We're doing a lot of restaurants. We're doing a lot of construction. We're doing a lot of business service companies, stuff like that, because a couple things happened. Everybody was subject to the closure except for a small list of essential businesses in 2020. But the effects of COVID were kind of complex. Supply chains, materials and supplies were slowed down in 2020, and many of our clients to this day, and their business is affected not only by impacts on their customers, but they're simply their inability to get the materials and supplies they need to do business. So
yeah, so it's pretty wide open as far as what industries are involved. And then what's involved in getting somebody into the process? I mean, I've put a link up there for everybody listening. There's a link in chat for a complimentary assessment one-on-one with Brian to look at your own situation. There's a very short worksheet to fill out there. So look at that link. I'm going to put it up there again. And you can get connected to Brian. We'll take a look at your scenario and tell you right there on the phone what's going on. But Brian, let's say somebody does qualify. What happens then?
Yeah, well, we always like to start off with that initial complimentary phone call, because in there, I'm going to give you a little bit of education about the program. I'm pretty good at determining, what quarters you're going to qualify for, what the best kind of way to get you qualified for the most by using the different criteria and also the different rules for alternate measurement dates, etc. After that, we sign a simple engagement letter. We send you a document request. This is a very easy process for the client. We need wage reports. We need to know how much your employees were paid in these quarters that we determine you to qualify for. We need your original 941 payroll tax returns, and we need the details on your PPP loans. From that, we generate all the documentation, all the limits and the qualifications and the amounts and the filings necessary. But the important thing on that complimentary phone call, by the end of that, we'll have a pretty good idea of what you qualify for, and then we'll have a pretty good idea what type of benefit you're looking at.
And yeah, so because Kimberly, thank you for the question. Kimberly is asking, what backup do you need to support the vendor access supply chain requirement? We do not have the revenue drop requirement.
Yeah. So we've got a document we've prepared that we send to the clients on how we document the supply chain disruption. Normally, on the phone calls, when we hear a customer experience these disruptions, we normally they're working with the business owner, and they're normally tasking their purchasing departments to go back to their emails, their communications with their vendors, to find documentation that there were shortages, there were delays, they were needing to use alternate products. And normally, a lot of business owners have kind of forgotten about it, but normally after they kind of go back through these periods, normally in industries where they're manufacturing or using a lot of critical supplies, normally they're kind of surprised at how much documentation they can generate to support a supply chain filing just from their vendor communications.
Got it. Uh, so there's a follow-up on that. I understand you cannot
Yeah,
double dip with PPP funds received in the same quarter, correct?
correct. We can't double count PPP funds, but this is actually, that's a good question. This is the reason, probably the reason the ERTC is underutilized. You cannot double count PPP funds. So a lot of people think I got either one, I got two PPPs. I can't do the ERTC. But while we can't double dip, our job is to work around the PPP. So we can, in any given quarter, we can track and take the wages prior to getting the PPP loan in that quarter. We can take the wages over the PPP forgivable limit of $100,000 a year, and we track exactly how long it takes to forgive the PPP loan. And we again start taking the ERTC wages immediately after. So yes, you can't double count, but you'd be surprised at how much ERTC availability there is, even when you're working around a PPP loan.
Interesting. Okay.
Yep.
And then as the process starts and you're getting somebody into it, I understand that part of your job and the team over there is to really manage the process, interact with the government authorities there who are handling this. So tell me a little bit about what you're doing along the way to ensure this thing moves along.
Yeah. Yeah. So after the kind of introductions and exchanges of information, after the client provides us the documentation, it's really in our hands. Our job is to track or to calculate these correctly. It's to protect our clients and have all the documentation for the qualifications, for the calculations. We prepared the filings, and then it's our job to make sure we get your claims processed with the IRS. Ever since COVID, the IRS has had a pretty difficult time. Even today, they simply it's difficult to even get them on the phone. We have to call back 10 times just to get them on the phone. After we file a claim, we file it trackable certified mail. We get a power of attorney, and we're calling the IRS once a month on your behalf to monitor the process, make sure they have it, and make sure the claim gets processed as quickly as possible. Because what we don't want is to wait that 6 months and find out there's an issue. I mean, we're monitoring it on your behalf each month while the IRS is processing the claim.
Along the way. And so I just again put up the free assessment link for anybody that wants to find out what it looks like for them. Click on that link, fill out the short form, and then you can we'll reach out to you and book a call and get that on the calendar right away. And Brian, what are there pitfalls you see along the way at all? I mean, things to avoid as you get into this?
Not really. I mean, we're very well versed. One of our the primary manager that works with us has a law degree. We're very familiar. We've been combing the government orders, both federal, county, and state, all the government orders to understand the qualifications to make sure we're doing the best job and getting everything available for our clients. I mean, that's kind of the nice thing about this program is there's no real way to be hurt, and if you're eligible, there's no real downfall here. I mean, there's no negative. We've never had a claim denied. We've been asked for corroborating information several times. We've had delays, but we've always gotten them through. So it's really, I mean, this is really one of those instances where I hear it every day where if you qualify, there's just, I mean, there's just no reason not to take it. And like I said, unlike the other two incentives, this one's just underutilized because of some of the same questions people are asking.
Right. Yeah. And the question came up, is there a fee paid to your firm before the ERT is received? I understand it takes several months to receive one. And you and I have talked offline. I know there's a nominal fee up front, sort of small fee, just to, really get somebody committed in there and working with you, but the fee is really when the funds are received. Is that correct?
Yeah, yeah. Depending on the size and number of quarters, we have a nominal fee for the preparation of the returns, but the vast majority is due when and if you receive the funds, and that's another important fact. You're receiving these funds directly. The funds come in the form of a check in the mail to you. We have a power of attorney where we can monitor it. We're normally seeing notices knowing they're going out, but these payments are going direct to you, and the vast majority of the fee is we have an agreement that you're going to pay our fee when you receive the funds directly.
Right. And what sort of payments are you seeing? I know it's, you kind of seen a lot of variation there, but what have you seen so far? Payments going out and it's happening. You're seeing some sizable payments.
Yep, we had a client last week with 3 staffing companies, filed 4 quarters. So he for 3 companies, so we got 12 checks last week, totaling $1.4 million. That was at 6.5 months. So the IRS, the processing times are coming down. We expect them to be in the 4 to 5 month range here soon. But that one was just received. Like I said, we've never had one denied.
Yeah.
And that's the most recent one.
Right. Question here, Sally. Thank you. One qualification is closure due to government mandate. My business in California, and all businesses receive SIP orders for most of 2020. I received PPP loan. Can we still qualify due to closure?
Sure. Depending on your industry, we're very familiar with all the orders in California, so we know the start dates and the end dates. So yes, again, we would need the amount and dates of the PPP loan, and depending on your industry and what county and city you're in, almost all businesses, except for a very small exception of essential ones, were affected by those closures in California. Most PPP loans came in mid to late second quarter of 20, so there's always something in there from March 12th to when you get that PPP loan. There's always something in there to claim.
Got it.
Always.
Okay, and excuse me, from Andrea, I thought that 2020 had to have a 50% reduction in gross receipts compared to 2019. Does the fourth quarter of 2020 have a different qualification?
No. So quarters in 20 have to have a 50% drop in gross receipts compared to 2019. In 21, the bar was dropped to 20%, but this is a little confusing, and I have no idea why the IRS implemented this. There's an alternate election date where we can qualify your first quarter of 20 or your first quarter of 21 with your numbers from 20. So essentially we can qualify your first quarter of 21 by having a 20% drop in your gross receipts in the fourth quarter of 20. That's a little bit confusing. That alternate election date is a little better to talk to directly on the introductory phone call. But yes, if you have a 20% drop in fourth quarter of 20, there's something to be worked on here for sure.
Got it. Okay. All right. Good questions. Somebody raised their hand. I may have missed that. The hand raised went away, but if you have a question, type it in there. And so again, first step is form, fill it out. We're happy to help. Question, what is the third qualification again, Brian?
Supply chain disruptions. So we got revenue drops, government mandates or closure, or disruptions in supply chain, meaning you could not get your equipment, your materials and supplies because your vendors were subject to a government closure. So third one is supply chain. That's the least used.
Okay. If you qualify, do you have to do any amendments to your taxes for that tax year? Question from Lee. Thank you, Lee.
Yes. If you, so the amount of the credit claim does have to be added back to your deductible wages on your federal tax return and not the state. So you need to consult with your tax advisor, but yes, it could require an amendment depending on what you filed already and depending on how and when your CPA is going to report it. But there's
Okay.
a little bit of strategy in that again we can talk about one-to-one, because
Okay.
we're having to help people with those too.
Okay. And sorry, Lee, just one more, I'm sorry, Brian, one more thing is, Kim was asking the second qualification again. So just those three you mentioned, what was the second one you mentioned?
Revenue decline.
One.
You're number one, you're affected by a government mandate or closure. Two, or you've experienced significant supply chain disruptions, meaning you're unable to get your necessary materials and supplies to do business.
Got it. Okay. Before we sign off here, any other questions? Brian, anything else I've not asked about or we've left out that you want to mention here?
No, you guys with the questions, feel free to click the link and just give me a quick call. I mean, these are what I like about this. This is an easy process to go through, with just a little bit of time up front. You come off that call knowing where you stand, you'll understand the program. We've made it very easy, a very easy process for our customers to go through, for sure.
Great. Thank you everybody for being here. Thank you for the questions. Brian, great. We're going to keep track of this, have you